Hi everyone, welcome back to my YouTube channel. Today I am going to teach a very unique concept called commitment management that is given in S4 HANA for the extension ledger. Okay, commitment functionality is already available if you have implemented the fund management. But now commitment management can also be done via cost center. So let us understand the process and let us understand what is the meaning of commitment. Let's see here. In this example, this is the cost center and this is my cost element. Okay, this is material consumption GL. So I am budgeting that for this cost center for material consumption budget amount is 10,000. Okay, so this cost element, or let's say in this way, this cost center can consume this cost element for 10,000 USD dollar. Okay, so I'm budgeting for this cost center. For this cost element, budget amount is 10,000 rupees. Now, what is called cost? What is called commitment? Now, commitment will get created the moment you create purchase requisition or the purchase order. Then commitment value will get created. Commitment means you are committing that this much amount you may be spending in the future. Let's say you are creating a PO worth of rupees 1000 rupees. It means that you are committing the budget amount of 1000 that you will purchase in the future. Okay, so that is the meaning of the commitment. Commitment, you have not actually spent the money, but in future you will be spending because you are creating the PO and purchase requisition. So it is assumed that you will be receiving the goods also, or you will be spending also. So again I am repeating, commitment means the moment you create purchase requisition or your purchase order, the worth of PO value is equal to your commitment amount. Okay, so here commitment amount is equal to PO purchase requisition slash PO value is equal to your commitment value. Okay, is your commitment value. So if I am creating the purchase order or purchase requisition worth of rupees 2000 rupees, then commitment will get created for 2000 rupees. Okay, 2000 rupees. Budget is 10,000. I have not spent the 2000, but I just created the purchase order and purchase requisition that I will be purchasing in the future. So 2000 rupees commitment get created, that is equivalent to your PON PR value. Now what is called actual cost? Actual cost means when you actually consume the budget, meaning that the moment you create, do the goods receipt. When you do the goods receipt, then your commitment value will get converted into the actual value. Okay, or actual cost. Your commitment will get converted to actual cost when you do the goods receipt. So this commitment value will move to from here to here, it will move, and this will become 0. Okay, now this will become 0. Let me put here back. Now, no problem, formula I can correct it. Now what is called assigned value? Assigned value means your commitment value plus your actual value, actual cost is equal to your assigned value. So if you have already spent or is already you have done any goods receipt, that value plus for any commitment you have created, that plus this is equal to your assigned value. Okay, so this plus this is equal to your assigned value. So actual cost means which you have already received the goods for, that value plus your commitment, if you add, it will become the assigned value. Here actual cost as of now we have 0 because first time I'm creating the PO. I'm assuming that prior to this I have not created any PO and I have not done any goods receipt. Okay, so This is the assigned value. Now what is the available budget? Available budget means your total budget minus your assigned value is equal to your available budget. That is your available budget. So this is the terminology you have to understand. Let me repeat here. For this cost center, for this cost element, I am budgeting this much amount. Commitment means the moment I create PR or PO, that value will be your commitment value. Actual cost means the moment I do the goods receipt, it means that now I spend that committed value. So this from commitment, it will move to actual cost. Commitment will become 0. As of now, we are going to create the commitment. So here it is 0 now. Assigned value means commitment value plus your actual cost is equal to this one. Available budget means your budget amount minus your this one. In this you have actual cost plus committed amount. So both you have to reduce from this to this. If you reduce, you will get the available budget. Okay, now let us understand how to handle this one. So first you create one commitment ledger. Okay, generally commitment and predictive both we create only single ledger. So go and create one predictive ledger. So I'm going to here, go to finsc underscore ledger. So I'm going to use this commitment ledger. Okay, go to extension, select this one, predictive and commitment. Here you select actually 0L, but somebody given 0C and already it is posted, so I'm not able to change this one, but you in real time you take here 0L. Okay, so inside the commitment ledger you assign your company code for which this functionality is applicable. So for this you put here US 10. Okay, now once you complete this configuration, go and load the budget. Okay, load the budget. Now this is the Fury app you have to use to load the budget. Go here, take this one. Okay, download the Fury app. Below here you have option, download this one, save it, fill your detail. First give your plan category. So this is the plan category you have to enter. Then fiscal year 2024, can expand it if you need. Let me put like this and let me expand it. Okay, now give here posting period 01. Okay, now give company code US 10. Give profits, sorry, give cost center. This is the cost center you are going to load budget in. Give cost element. Here for same cost center you can give multiple cost element and give the budget amount 10,000 and give currency. My currency is USD. You can give company code currency here. Okay, save it. After saving, go to Fury app, close it, browse here. You have saved in the desktop. This is the one you have saved. Load it. Okay, there is no error. Let me delete. Okay, now go to below. Here you can do the test run. Test also you can do, and directly import also you can do. How? So I see there is no error, so I'm doing directly import. Okay, it got imported. Your budget got imported. You can display also from it. Display financial data. Click on this one. Okay, so once you come here, you can click and go to. See, it is looking something like this. Okay, More than this, go to this Fiori app and see the report. Cost center budget report. Go to this Fiori app. This Fiori app is more good. Give here. Take this cost center. Is coming. Give the cost center. All other thing looks okay. Now go here. Click on go. Come here. So for this cost center, okay, this is the budget you have loaded. This is the budget you have loaded. There is no commitment because you have not created cost center for this cost center. Then actual cost, then assigned value, then available budget. As of now, whatever budget you have loaded, same budget is available. Okay. So this is the report. There are other so many Fiori apps are there to see the report. Now let us create the PO. Now let us create the PO. Okay. Go to ME21N. Give here. Okay. Go to here. Give here cost center. Since budget is loaded at the cost center, you have to do the cost center related purchase. Okay. Give here material. First, let us do the budget testing. So I have loaded 10,000 budget. So I'm going to first create the PO more than 10,000. Okay. And I'll check whether error is throwing or not. So I'm giving here, let's say 200 and I'm giving rate like 100 rupees. So 200 multiplied by 100, it will become 20,000, which is double of this one. So it should give me the error message. Okay. Now give here cost element you give this one material consumption GL. It automatically picked from OBYC setup. Now give this cost center in which you have loaded the budget. Give here, hit enter. Okay, so your PO value is 20,000. Okay, but you have loaded the budget only 10,000. Do the check. It should throw the error. See what it is telling. Budget tolerance limit is, so it is throwing, it is crossing more than 100%. It is throwing error. Okay. So your budget control is working fine. Now, even if you give up to 10,000, it will accept. Okay. Up to 10,000, it will accept. So up to there, it will just give you the warning message. Now PO value is 10,000. See, only warning message it is giving. Okay. Because I have set up if more than 80%, if I consume the budget, it should throw warning message. Okay. So your budget control is working fine first of all. Now let us reduce the value. I am going to create for 3,000 rupees PO I am going to create. Okay. 3,000 rupees PO I am going to create. The moment I create PO worth of rupees 3,000, commitment item will get created for the 3,000. Okay. Now save it. Now come here and refresh this report. So here you'll find the commitment value worth of rupees 3,000 rupees here. Now go to here. Again keep go. See here also you can see commitment item. Okay. See here now 3,000 rupees commitment get created. Okay. Now see the report. See the report now this side. Okay. Here come this side. So commitment 3,000, there is actual still 0. This assigned value is your commitment plus your actual. So 3,000 available budget got reduced. See 10,000 minus this assigned value is equal to 7,000. Okay. Because you had 10,000 budget, now 3,000 is assigned value is equal to 7,000. Okay. The moment I do the goods receipt, this 3,000 will become the actual cost. Prior to that, let us see the table, because commitment will get saved in the commitment ledger. So go to table level AC Doka. Give here 0, E. Okay, and give here US 10. You can give the posting date also, so it will become easy. So PO created on which day? Let me check the PO. 205. Otherwise I can filter by PO also in AC Doka. Go to AC Doka. Okay, go to PO. PO technical name is EBLN. Okay, so you can give the PO number here. Okay, now and make sure that you are giving 0E. Okay, because this is your commitment ledger. Run it here. In your standard ledger there won't be any entry during the PO creation. Okay, so see these two commitment line item got created. What commitment line item got created? Whatever journal entry post during the GR, that entry got posted. That is your material account debit or inventory account debit to your GRIR account credit. That GL. Sorry, so here not material account debit, your material consumption account debit to your inventory account. Okay, here material consumption is getting hit because you're purchasing the non-stock material or consumable material. So your consumption account debit to your inventory account credit got created. Okay, this is the your commitment documents. This is the commitment document which start from PA series. You can check here right side all this thing. Okay, this is the PO number. Okay, you can see. So these are the GL. This is your consumption GL and this is your inventory GL. So this is how it is there. Okay, you can view this document into the GD22 T code. Go to GD22. Okay, and run it. See, this is the document got created. Okay, when you do the PO creation, this is the commitment documents. Now let us do the MyGo and then observe it. Okay, PO number. Let me do the MyGo here. /n ME MIGO MyGo. Okay, so PO is this one. Take this one. Okay, do the MyGo for all quantity whichever you have ordered. Item okay. Check it. Post it. Okay, the moment you do the MyGo entry, first of all see this report. From commitment now it will become the actual cost because when you created the PO it was just committed. Now you actually spend that money. So it will become here actual cost. Refresh it. Go to here. Again click and go. See now commitment becomes 0 and your actual cost become 3000. Okay, and assigned value remains same because this plus this commitment plus actual is equal to your assigned value and available budget is 10,000 minus this one. Okay, so 7,000 budget. I hope you are clear here. Now let us go and check the AC Doka. Refresh it. So opposite journal entry will get posted. Okay, when you created the PO, that time it was material consumption account debit to inventory account. Now your consumption will get credited and your inventory will get debited. So that journal entry will get posted. Okay.